Navin, firstly, thank you so much for joining us on the bulletin. My first question to you. With South India's farm economy heavily dependent on crops like paddy, coffee, pepper, mango, cashew and sugarcane, how vulnerable is the region to a weak monsoon and possibly prolonged heat stress this year?
Thank you, Jules. Thanks for inviting on the panel. I'll just give you a brief introduction about myself. So I am not a crop expert, but I look at agriculture from an insurance perspective because I have been an underwriter for crop insurance business for 10 years. So this year, as you mentioned, that El Nino is going to impact, and it is going to be a super El Nino. So we all know that it has a very great impact on monsoon. And the kind of projection it has this year, the South India is projected to be, some of the area will be as high as 3 to 4 degrees from the normal temperature. And every 1 degree of temperature rise, there is an impact of possible up to 10% of the crop, reduction of the crop output. So it is going to be severely impacting, especially in South India, because South India has double dependency on monsoon. One is southwest monsoon and the other is northeast monsoon. Larger part of the Andhra coastal belt and Tamil Nadu is dependent on this double monsoon. And if El Nino year is there, there will be a weak southwest monsoon followed by a delayed northeast monsoon, which will have a greater impact. So it needs to be very, very watchful this year.
Absolutely. Now, Naveen, unlike North India, much of the South's agricultural exposure is tied to horticulture and plantation crops. Does the current crop insurance ecosystem adequately cover these kind of risks?
So the product is largely evolved over the period. But if you look at, especially for plantation coverage, the product, it's not that significantly covering the entire thing. Because PMFBY product, if you look at, it is largely catering to the annual crop cycle. Plantation crops are multi-year crop cycle. So that doesn't exactly fit to that PMFBY architecture. But obviously, we have revised weather-based crop insurance scheme, which actually fit to the horticulture crop. But their horticulture crop, the pricing for horticulture crop is 5% is contributed by the farmer compared to other cereal pulse product for which the rate is 2%. So that will be a big discourage for the farmer to participate into. And also from the government side, most of the government, they are quite irregular in notifying the horticulture crop under the scheme. That also we have seen over the period that participation from the small farmer is a bit erratic.
Right. Now, Naveen, states like Karnataka, Telangana, Andhra and Tamil Nadu have seen an increasingly erratic rainfall patterns, especially in recent years. Has that already started changing premiums or underwriting norms for southern markets insofar as insurance is concerned?
So actual pricing model has already started taking care of that. It has been recalibrated over the period because if you look at the last 10-year weather performance, especially 5-7 years, the weather climate has been more volatile. And that is taken care of. So even the reinsurer pricing model, they have built a model which is largely forward-looking rather than historical loss experience. So last 30-year data is not largely represent how it is going to happen in the future. So the recent year weightage has been taken care by the reinsurer in the pricing model. So actually has developed that things and the pricing in recent year, we can clearly see that there is an impact of the climate variation.
Right. Now, I want to draw you back to the last El Nino cycle, which saw, multiple horticulture belts in South India see pest attacks and heat-related crop stress. Are insurers now factoring in climate-linked secondary risks as well, not just rainfall deficits, but secondary risks into coverage models at this time and place?
So if you look at whenever the El Nino happens, there is variation in the temperature and humidity. And whenever there is a variation in temperature and humidity, the chances of pest attacks are very, very increased. And if you look at the reinsurer has started taking care, they have started building up a correlation between humidity and the pest attacks. And accordingly, whatever the climate model projected, they are building that thing in the pricing. So all these things are now taken care of. when we are doing the pricing of the crop insurance scheme.
Right. Let's shift focus, Naveen, from pricing to penetration. What we have been seeing is that crop insurance penetration largely remains uneven across southern states, especially among smaller farmers and horticulture growers. Why has adoption remained this patchy despite the rising climate risks that we keep witnessing year on year?
So there are multiple reasons to it. First of all, the notification of the village and crop, even the farmers are interested. We have seen that the notification from the government side under the scheme has been quite uncertain. It is done on the regular basis. That is one reason. The premium, as I mentioned, the premium contribution, the farmer side, the 5% as relative to other cereal products, that is also on the higher side. The third thing is for horticultural product, weather-based crop insurance scheme is more suited, which is slightly complex in nature. The technical perspective is slightly complex, which is not easily understood by the farmer. So a very high degree of awareness program need to be done to educate the farmer to participate under this scheme. So these are the reasons for which the horticulture product participation in the scheme has been slightly poor.
Right. But what's the awareness like, Naveen, at this time and place? Because if you look at South India's plantation and agribusiness ecosystem, and this includes, of course, coffee estates, spice growers, exporters, food processors, is there enough awareness and availability of parametric or weather-indexed insurance products?
So availability is not a challenge. As I mentioned, the awareness need to be focused on. Currently, the way the insurance product is distributed is largely dependent on bank and CSE. Whereas we need to look at in agriculture the entire value chain, like exporter, processor, and whoever is the distributor. We need to involve them in terms of creating the awareness to the farmer. Because bank and CSC, they are not completely catering to the farmer, which is normally situated at very far from bank and CSC. On day-to-day activity, if you look at the FPOs, exporters, the processors, they are more involved with the farmer. So these are better suited channel to create the awareness among the farmer.
Right. Let's look ahead then, Naveen. If the South continues to face more frequent heat waves and rainfall volatility like we're seeing today, what do you think the biggest gaps are that both policymakers and insurers will then need to address in protecting the region's agricultural economy?
South India, the dependence on the horticulture crop is very, very high. And for RWBCI's product, if the farm is situated from a weather station at a distance of 30 kilometers, the variation in weather parameter is not largely reflecting the kind of loss which will happen to the farmer. So first of all, we need to create the density of the weather station very, very high, which is actually the one area where we need to focus on. The other thing is creating the awareness. The pricing sides, we need to look into how we can make it more affordable for the farmer so that more and more farmer is willing to join this scheme. And obviously, the one other thing is we need to involve FPO also, because if the pricing is done on the group basis, it is easy for the small farmer to participate into that. So the pricing, we need to involve FPO so that a group level pricing can be done for this to make it more affordable for the farmer.